Hi, everyone. Thank you for joining us. My name is Melanie, and I am one of the performance marketing specialists here at LiveRent. So today we're joined by a special guest. We have Manis Shortal, who's the VP of Business Development at TaxBack. Thank you for joining us today, Manis.
Hi, Melanie. Yeah, no worries at all. So thanks to you, Melanie, and everyone at LiveRent, and thanks to everyone tuning in to this webinar we have today. So as Melanie said, my name is Manis Shortal. I'm working in the business development department of taxback.com. So we are a tax filing company. We specialize in non-resident tax filing within Canada. We are a global company. In Canada, we specialize in non-residents, and we're in 23 different countries worldwide.
Awesome. And we are a big fan of your work here. And I just quickly want to tell you and the new folks with us a bit about LiveRent. We are a rental platform designed for renters, landlords, property managers with solutions for every stage of your rental journey or process. We help you digitize your entire rental process from start to finish. And we love to do these free Live Talk webinars. And today's topic is Renter's Guide to Getting a Bigger Tax Return with TaxBack. So today we'll be looking at three things. The first one being your Tax 101, basic tax principles for renters. Second one is tax in the time of COVID-19. And lastly, we'll talk about tax hacks to get a bigger return. So part one is going to be our intro. It is Tax 101, so we're going to be getting into everything you need to know about your Canadian tax return and the basic tax principles for non-residents. For the second part, we will look at taxes during COVID-19, and this is going to be one of the most complicated years wherever going to do your taxes because of the pandemic, but we will show you how to navigate through it. And finally, we'll take a look at tax hacks and secrets that you can use to get a bigger return. And at the end of the webinar, we are going to do a live Q&A, so Manis will be answering your questions about tax returns. Make sure to enter your questions in the live chat on the right-hand side of your screen throughout this webinar, and we'll answer them at the very end. So before we start, I just want to take care of some housekeeping. This is the fun part that I like to do, and we're going to take a look at the audience and see who's here with us today. So based on our registration, we do have 53% of you who are residents, 32% who are non-residents, and about 3% who are, one second. There you go. Sorry, 3% who are deemed resident of Canada and 1% who are deemed non-resident of Canada. And then there's the 11% who say that they do not know. So for the 11% of you that said that you don't know, hopefully this webinar will help you figure that out. Manis, what do you think of our audience today? Are you surprised at all? And what is the difference between a deemed resident?
Yeah, no problem. So not all too surprised. You guys have a steady mix of residents, non-residents, and then the other kind of determining factors in between the deemed resident of Canada and also a deemed non-resident. So Canada is a very multicultural country, and it's becoming a real hotspot for international students. So it's great to see the nice mix of residents and non-residents here. To answer your question about deemed non-resident of Canada. So if you are a deemed non-resident of Canada, you have stayed in Canada for longer than 183 days, which is also 6 months. So you've stayed here for longer than 6 months, but unfortunately you have not you do not have what's called significant residential ties to Canada. So significant residential ties can be both primary and secondary ties, and I believe we'll discuss that a little bit further in the webinar today.
Mm-hmm. And to make the most out of your experience at our Live Talk webinars, please remember to turn off your ad blocker. If you haven't yet, create an account so you can unlock the side panel features, which includes our giveaway draws. The live chat panel is your place to introduce yourself, let us know where you're from, and ask us your questions for the Q&A. It is on the right-hand side of your screen, and we have LiveRent agents who will also be answering any immediate questions you may have in the live chat as well. So we do have the giveaways happening, and you'll have a chance to win one of the three $100 Amazon gift cards. So in order to win one of those, you have to first navigate to the giveaway panel on the right side of the live stream, complete the specified actions, and click Submit Entry. Each completed action is an additional raffle entry, so you have up to 5 entries to enter the raffle. So again, once you complete the action, please don't forget to click Submit Entry. We will be running some polls during the webinar, so you'll see those pop up. And actually, let's get our first one started. We want to know, how confident are you to do your own taxes? This is actually a great question to start us off, so make sure you cast your vote and we'll reveal the results later on. So for our first section, which is Tax 101, Basic Tax Principles for Renters, Manus, my question for you is, what's the Canadian tax system like and what is important to pay attention to?
Yeah, no problem. So, Canadian tax system, it's quite like a lot of other tax systems around the world. So, we understand as a non-resident, it might not be at the forefront of your thinking to come to terms or to get a grasp on the Canadian tax system. So, essentially, that's why we're here today to try relieve any stresses you might have around tax filing. So, the Canadian tax system, in short, it's a progressive tax system, which means the more you earn, the more tax you pay. So, the higher income amount you receive as an employment income, then the higher percentage you pay in taxes. So, not very surprising. It's quite similar around the world. And also to note, there are both federal and provincial tax rates. So federal tax rates stay the same no matter where you are in Canada, and then there are provincial tax rates and credits as well, which differ depending on the different province you're living in. A nice thing to note about filing taxes in Canada is that it is possible to go back up to 5 years in backdating your taxes. So if you did miss your tax filing, if you forgot to file your taxes in, say, 2018 and 2019, rest assured you can go back and you can file those taxes. If you were due a refund in those years, you can still claim your refund. And if you have an amount owing, you will have to pay that back as well. Other than that, most of our non-residents will receive a tax refund. The average taxback.com refund in Canada is $998. So that's Canadian dollars. And the reason or the what's behind the tax refund is usually an overpayment of tax. So the overpayment usually comes from 3 areas of taxes. That's your income tax, your Canadian pension plan, and then also your employer income.
Okay. So thank you. One of the things that I do want to point out is the date today. It is March 11, 2021. We are right in the heart of tax season right now. Manus, can you tell us a little bit about this year's tax season and what are some of the other important dates to keep in mind?
Yeah, absolutely. So I'm sure it comes as no surprise to anyone, but last year and also this year is basically a year like no other. So with all the different changes we've had, there's also been changes to the tax system. Now, luckily this year, the tax filing deadline has not been changed. So last year the tax deadline was pushed out to June 15th. This year, it's remaining the same on April 30th. There's been lots of clear and concise messaging from the CRA in terms of the tax filing deadline and what you need to do before those dates. So the most important date you see on your screen in front of you is April 30th. This is the deadline in which you need to file your income tax return by. Other important dates to note there would be June 15th. If you're self-employed, you need to file your tax return by June 15th. If you're found to have an amount owing, so if you have some taxes you need to pay back to the Canadian Revenue Agency, you need to pay those back before September 1st before you will incur late filing fees and penalties. And we'll touch on those a little bit later. And lastly, it's important to note that we're filing our taxes now in 2021, but this is in relation to the 2020 tax year. So the tax year is the same as the calendar year. It runs from the 1st of January right up to the 31st of December. So if we're including expenses, if we're talking about tax credits on our tax return, it's all relatable to the year 2020. So in between the 1st of January and the 31st of December.
Mm-hmm. And these are some important dates to note. So I hope you have your digital or physical calendars ready. Let's check in on our first poll because I am curious to see how confident you guys are feeling doing your taxes for this season. So 47% of you guys said that you have no idea what you're doing, and that's okay. I'm on the same boat, hence why I have an accountant. 33% of the audience voted that they do know what a T4, and that's about it. While 20% of our audience said that they know enough but want to know more. This is awesome. Great timing for this webinar.
Absolutely. So I think some interesting results there. I'm not all too surprised. I know taxes are not usually at the forefront of your thinking, and it can be quite panicky when it comes to tax filing time and you're trying to get your head around different systems, especially if you're a non-resident. It can be a new tax filing system that you're not exactly used to. So hopefully at the end of the webinar, we'll relieve some of the concerns you've had. And it's important to note as well, you can use the Q&A section to ask any questions you might have.
For sure. And it might feel like you also have a lot of time to file your taxes, but you really don't. So for most of us, everything should be filed by April 30th. Manus, are there any penalties if you haven't filed your taxes by April 30th?
Yeah, so there is, the short answer, there is a late filing fee and a penalty as well. So it depends on your personal tax circumstance. And I guess I'll probably take this time just to a bit of housekeeping from the tax back point of view. Is this information is for your generic or for your general purposes only. So everyone's tax position, it's sort of like your DNA or your fingerprint, where it differs with each different individual. So there are tax-free allowances, there's tax credits depending on the income you earned. It's very unique to your personal circumstances. So the information is for your general purposes, but there are also updates coming from the CRA on a regular basis. So it's important to keep that in note. But the late filing fee and the penalty. So if you are due to pay back taxes to the Canadian Revenue Agency, and if you don't pay by the tax filing deadline, then there are going to be a late filing a penalty. It's 5% of the amount you have owing. So that tax you need to pay back to the CRA, you need to pay 5% of that as a penalty. And then for every additional month that you're late, you're going to add 1% of that amount onto your bill. So that's capped at 12 months. So the CRA, as nice as they are, they won't let you go past 12 months in owing or having an outstanding debt to this Canadian Revenue Agency. But this is all reason to kind of bring it back to the April 30th deadline. You won't find out if you have a debt, if you have an amount owing, or if you have a refund due until you file your taxes. So it's fundamentally important to get your taxes in before April 30th, and at least that way you can work out a payment plan with the CRA, or at least you can find out you have a refund due, and then you can take your time a little bit. But the most important bit is to get the applications in before April 30th.
Yeah, so it really does pay off to get your taxes done early. And just to let everyone know who's watching, we're going to be posting this webinar onto our YouTube channel. So in case you want to come back and listen to it to catch some of these specific dates and details we've covered, it is going to be up there for you. As we did see earlier, 11% of our audience is unsure of what their residency status is for this year's tax purposes. Manas, I'm curious if you can talk a little bit about determining your residency status for tax purposes.
Yeah.
In particular, what do international students and non-residents need to know about this and how they can figure out their tax residency?
Yeah, absolutely. So unfortunately, tax residency statuses are not the easiest thing to work out. There's a lot of different determining factors. And I guess it's fundamental to point out that before you file your taxes, you need to know your tax residency status. So it'll depend if you file as a non-resident or a resident. So one of the first things that the CRA will look at, or the Canadian Revenue Agency, well, they'll look at it as a case-by-case basis. So no two cases are exactly the same. And like I said, there's lots of different determining factors. The main one would be you have to be in Canada more than 183 days within the calendar year. So if you're filing your 2020 taxes and you stayed here in Canada for longer than 6 months, then you satisfy the 183-day rule. But unfortunately, it's not quite as simple as that. There are other determining factors. So once you satisfy the 6-month rule, the CRA will start to look at your significant residential ties to Canada. So like we said, there's both primary and secondary ties. Primary ties, unfortunately, a lot of non-residents, so if you're on an IEC visa, maybe you're a temporary foreign worker or possibly an international student, a lot of these guys don't have, they don't meet the requirements for establishing the significant ties, the primary significant ties. So that would be having a spouse or a common law partner, having dependents in Canada, or owning your home. Secondary significant ties would be having personal property, or perhaps you have social ties to Canada. You could have membership to a gym, you might own a car, or you could have a credit card. So all these are secondary ties. So the CRA will look for a combination of both to determine your residency. Not only that, we can go a little bit further as well. So they might look at tax treaties between your country of residence and Canada. So Canada does have over 150 tax treaties, and again, we will chat about that a little bit later. So tax treaties come into play. A lot of people need to, they can only be residents of one country at one particular time. So a lot of people will adopt non-resident status in Canada to remain a resident in their home country. Other things that the CRA look at in terms of figuring out your residency status is the length of stay. You have stayed in Canada, what your intentions are after your visa expires. So if you intend on getting PR and making yourself a bit more of a permanent resident or having more of a stay in Canada, having more ties, they will also look at this. Kind of a tip that we always say is if you want to look at your social insurance number, if your social insurance number begins with a number 9, that would indicate that you're a temporary worker in Canada as well. So taxback.com, we can figure out your determination, or we can use our software, to determine your tax residency status. Our tax agents are trained in residency law, so we'll take all these different determining factors on board, and we'll give you a result in terms of your residency.
That's super insightful. Thank you. So now that we know exactly what status we're going to be filing with, what do we actually need to file? And before we answer that question, we want to know, how do you organize your tax filing documents? Manus, can you quickly go over what exactly non-residents need to have prepared before they do their taxes?
Yeah, absolutely. So we have some of the key different kind of documents and bits of information that you'll need to have to file your taxes on the screen in front of you. So first one would be probably the most important one. It's your social insurance number. I know a lot of non-residents, when they arrive, they receive their SIN or their social insurance number, and then they kind of forget about it. They're not too sure where to find it. So the first one is you need to have your social insurance number. And this is linked to the second point there, the T4 document. You can find your SIN or your social insurance number through your T4. Your T4 is a statement of your income earnings and the taxes you have paid for each different employer in Canada. So you'll receive one T4 for each employer you had throughout the tax year. You also might need your T4A, or another document that's very similar is your T4E. This is a statement of any benefits or sort of extracurricular income you have received. If you're an international student, you will need to have your T2202 form. This is your tuition and enrollment certificate you'll receive from your educational institution in Canada. And we do chat about your different tuition credits a little bit later. You'd also need some form of ID, most commonly your passport. If you had any receipt, or if you have any expenses you incurred throughout the 2020 year, such as medical expenses, maybe their work from home expenses, you can hold on to those receipts because you're going to need them at a later date. And then lastly, you need your entry and exit dates. So you might not be fully aware of your exit dates, but what we would advise is to put down the date you intend on leaving, or at least the date that your current visa expires. And I might just bring it back to the social insurance number. So we might have some international students on this webinar who may not have the right to work under their different visa type. So if you don't have a social insurance number, you will have what's called an individual tax number, or an ITN. You can apply for this in the same way as the social insurance number. And if you don't have your SIN, then you need to use your ITN when filing your taxes.
Yeah, that sounds fairly manageable. I personally like having all my things organized and ready to go well ahead of tax season myself, but I am a big planner, so there's that. With the process of filing your taxes, this can be very similar to renting, in which there are a lot of documents and files you need to prepare and organize throughout the entire rental process. So with LiveRent, it is designed to be the solution for this, making this process entirely digitalized and automated. As a renter on LiveRent, you'll have everything neatly organized all in one place. Within the chat, you'll find a rental history of your conversations with your landlords. You'll also find your renter resume, aka your digital tenancy application, where you only need to update your information once, and it'll automatically pre-fill everything for you. Kind of like the CRA portal, but better. So the same goes for all digital contracts or tenancy agreements you've signed. And on top of that, you can access any additional digital files and photos shared with your landlord within the chat. So all of this information is organized for you in a nice timeline and secure and accessible at any time. So the final thing we're going to cover in our Tax 101 section before we move on is going to be what happens if I don't file my tax return. But before we answer that, let's take a look at the poll results. So we had asked you, how do you organize your tax filing documents? So 31% of our audience said that they save all their physical documents in a folder. 38% of you said that you have digital copies on your desktop, while 25% of the audience have saved their digital copies using a digital filing system. It's very advanced of you guys.
Yeah,
Manus, any thoughts on this?
Yeah, very efficient group of people you have in the webinar today. That's great.
Yeah.
No, it makes sense. What I tend to do is take photos of receipts as soon as I receive them, and then upload them to the cloud, or at least send them to myself via email. It's a nice way of keeping them all tracked. One thing I would also note is with the medical expenses or any expenses in general, if you've misplaced your receipts, or you have, like myself, you've kind of put them in a drawer and you might have forgotten exactly where they are or what's happened to them, you can go onto your online banking, and you can kind of print out your bank statements, whether it's your credit card, your debit card, and it's a nice place to have your receipts stored as well.
Yeah, good point. Thank you for everyone for joining our polls. Don't forget to ask your questions in our live chat. That way we can answer them during our Q&A. And make sure that you've entered to win our giveaway. Manus, if I am super disorganized or like procrastinating and I feel like, well, why even bother doing my taxes? Maybe I didn't even make that much money last year in Canada. So what is the point? Is it okay to not file your taxes? And can you talk about what happens if we don't?
Yeah, so I guess the straight answer is everyone needs to file their taxes. It can be a painful process sometimes, and I know a lot of us have had a tough year last year and may have continued into this year, but it's very important to file your taxes. So once you earn over the tax-free allowance, so it's a $13,808 amount. Once you've earned over that, you are legally obligated to file your taxes. However, if you didn't earn that amount, or if you didn't earn anything, it's still in your best interest to keep a clear record with the Canadian Revenue Agency. So if you want to be eligible for tax credits or to claim certain tax credits or carry them forward to the following year, it's always important to file your taxes to obtain those. So you are legally obligated. And I know a lot of people in Canada, if you're an international student or a non-resident, you might not be fully aware of your tax filing obligations. The process might be a little bit confusing. So I guess the short answer is you do need to file. And essentially that's why taxback.com is here to help you if you are uncertain. You can also, if you don't file your taxes, you can jeopardize your future visa applications. If you're traveling in and out of the country as well, and you don't have a clear record with the CRA, then that can sometimes become a problem. So if you're studying in Canada, for example, and you want to stay on and kind of, put your studies to practice and gain valuable experience here in market, then, it's always best advised to have your tax record up to date. Not only that, but, the future visa applications might be jeopardized, but there's also the late filing fee and the penalties for a late filing. Like I said earlier, if you have a unfiled tax return from 2019, you may owe the CRA money from that year. So there'll also be a late filing fee and a penalty on that in particular year. So it's important to kind of keep your taxes up to date just to make sure you know what your tax positioning is.
For sure. So everybody needs to file their taxes. So moving into our third poll now, we want to know, did you participate in any EI, CERB, or CRB, any COVID-19 related programs? And before I run full speed ahead to do my taxes, I'm really curious about this last tax year in particular. So let's move on now into our next section of the webinar. We all know that 2020 was a very unique year in so many ways. So what does that mean for your taxes this year? So as I understand it, there are two main things to know about taxes and COVID-19. The first thing is everything related to the Canada Emergency Response Benefit, aka CERB, the Canada Recovery Benefit, and employment insurance. And then the second part is kind of fun, and that's the work from home tax credit, which I think can help save some of us some money this year. Manus, can you talk a little bit about the COVID-19 programs and what their tax implications are for people filing this year?
Yeah, absolutely. So like we said, we had quite a difficult year last year with the coronavirus pandemic, and with that in mind, the government of Canada rolled out a couple of different benefit schemes. Some were initiated earlier on in the year, but CERB was one of the first ones, I believe, where individuals could receive up to $14,000 tax-free. And that is exactly what it is. It was tax-free, meaning that you will need to pay back tax on that a little bit later. So there was the CERB, the CERB, there was CRB, and there was also your EI payments, your employment insurance. So each one of those will have to be reported as income earned in your 2020 taxes. Now the good news is with CRB and EI, there was already 10% of that amount was withheld for tax purposes, meaning 10% was withheld, but unfortunately that's more than likely not the full amount. You will need to pay a little bit more additional in taxes. So CRB and EI had 10% withheld from source in terms of taxes, whereas the CERB had nothing withheld. So if you did receive the full amount, $14,000, then you will need to pay back. We estimate maybe somewhere around 2,500 Canadian dollars. So it is going to be different for everyone's personal circumstances. But what you will receive is a T4A or a T4E statement if you received any benefits. These statements are going to clearly display exactly how much you received, and then from that you can work out your tax implications. So it will be depending on how much income you received throughout the year, whether you're still on these benefits, and when you left as well. So yeah, the C or B and the EI, a bit of a tongue twister, but they're all going to need to be reported on your income tax document for employment earned in the year 2020.
Okay. So what does it mean for people, and how much of taxes do they have to pay?
Yeah, so I guess that's probably the most common question we get is, I know I received these payments, or perhaps you received them accidentally and you need to pay them back. So there's a couple of different implications here. Generally, our tax agents are saying for the C, E, or B, you're going to need to withhold approximately 20% of the full amount in order to pay back in terms of taxes. With C or B and EI, like I said, there's already been 10% withheld, so we're going to suggest you withhold a further 10%. Of course, you may need to pay more tax than what we're suggesting here if you earn on the higher scale of your income. So it's going to be different for each and everyone's different circumstances. But I guess what I would try and get the message across to people is not to panic and don't be too worried. The CRA can set up a payment plan depending on your income and also on your personal circumstances. Not only that, there's other tax credits. So there's the tax-free allowance and there's the work from home tax credit. You might have had medical expenses as well. All these expenses and tax reliefs you can use to offset against the amount of tax you owe to the Canadian government. So although you may have a bigger tax bill than usual this year, there are other ways, and especially new ways, that the Canadian government have brought out for you to reduce this tax bill. So we're going to discuss those a little bit further as well.
Okay, great. And I know that's a lot to take in. So if you do have questions, please put them in our live chat and we'll be able to come to them at the end of the webinar today during our Q&A. So let's check in on our latest poll. So we did ask you if you guys participated in any EI, CERB, or CRB, any COVID-19 related programs, and 58% of the audience did participate in CERB, 8% participated in EI, and 33% of the audience have participated in more than one. Any thoughts on these results, Manus?
Yeah, so not all too surprising. It was a difficult year. There was a lot of benefits brought out by the government. Yeah. So I'm kind of glad to see the uptake was there, because that's exactly what they're there for. We pay tax throughout the tax year, so that's exactly what it's there for. It's there to be claimed from anyone that's been implicated by the COVID-19 pandemic, and evidently so many people were. So it's great to see that it was widely available and it was rolled out pretty much without question and as a blanket rollout across Canada. So it's great to see that we're kind of taking or availing of things that are made available to us.
For sure. And to help me introduce our next section of the webinar, we have another poll for you. So let us know, did you work from home during the pandemic? So did you end up working from home like me and Manus, or not? Let us know. So for the next section, with COVID-19, it has brought some tax challenges, but it's also brought some opportunities. Manus, can you tell us a little bit about the home office expenses?
Yeah, no problem. So traditionally, there's always been home office expenses that you can write off in your tax return. But I guess with the changes we saw last year with coronavirus and the pandemic's kind of sweeping around the world, a lot of people were working from home, and in reality, more people than ever before were working from home. So I guess the Canadian government had the foresight to kind of see this and to try and bring in some tax reliefs for individuals working from home, which was well deserved and nice to see as well. So there's two different ways in which you can claim back expenses from working from home. The first one we're going to talk about is this new process that was brought in. It was brought in December 2020. So just recently it was brought in, and it's a simplified process for claiming work from home expenses. So the main reason it was brought in is to make it available to more than ever before. You must have worked for more than 50% of the time over for 50% of the time over a period of at least 4 weeks. In 2020, and this has to be due to COVID-19. So you need to be working from home because of the pandemic. And then the most common question we get is, how much can I receive in terms of benefits, or how much can I claim? So the total figure you can claim is $400. or up to $400. And this is broken down by $2 per working day, up to, like I said, up to a maximum of $400. So that's the simplified process. The best part about it is you don't need to have an employer sign off on a form. It's very straightforward and you can do it from start to finish yourself. Like I said, this is the new simplified process. And then going back to the traditional detailed process, which has been in place for a number of years now. The main benefits for going for the traditional detailed process is if you estimate your work from home expenses to be in excess of $400, then I would suggest going with the traditional detailed process. Another main difference is you can write off different expenses where you couldn't do this with the simplified process. So expenses such as maybe you had to purchase a new desk or an office chair. Perhaps you had to upgrade your Wi-Fi because of your connection speeds. Maybe you're hosting webinars like myself and Melanie. Perhaps your heating went up because you're in the house a lot more often. So these kind of more detailed expenses can be listed under traditional method. So if you have to claim more than $400, this is what we would recommend. Now, the only drawback here is you need to have your employer approving of this form. So you need to list the details on a T2200 form or the T2200S, it's often called as well. Your employer must have completed it, signed, and passed it back to yourself. Now, of course, taxback.com can facilitate all these forms with both simplified and also the detailed process as well. So I guess they're essentially the two main differences between the two, but good news overall with the simplified process.
For sure. And working from home was a big change for me personally. I am a social butterfly and I naively went into the pandemic thinking it'll blow over after 3 months. And clearly I was very wrong. But this extra money, I'm sure it'll help a lot of different people. And for me, myself, it's definitely going in an emergency fund because you just never know what happens nowadays. So this is exciting. This exciting new tax credit kind of leads into our third and final section of our webinar today, and it's the one you've all probably been waiting for. We're going to dive into tax hacks and secrets that will help you maximize your return. So just to clarify, we are not hacking the system. We're just simply sharing our top tax tips that not everyone may not know about. So just a quick overview so you know where we are headed. We're going to take a look at your T2202 tuition and enrollment certificate, expenses, medical expenses, TD1 form, tax forms T4 and T4A. So before we get into it, let's check our latest poll results. So we asked you if you guys have worked from home during the pandemic. 8% of our audience said no, there's no change to their work. 15% of the audience voted that there were big changes, but they are almost back to normal. And 77% of the audience is still working from home, much like us. Good to know.
Yeah, there's no real surprises there, I guess, and it's exactly the reason why the Canadian government brought in the new work from home tax credit at the $2 per day. So it's great to see that it was in demand. There's 77% of the individuals on the webinar have worked from home. So I'd like to hope that majority of these guys are claiming either the simplified or else the detailed process when working from home. And if you have any questions about, like, we are just touching upon the different subjects here. So if you want to pop questions into the question box, and also if we can't get back to the questions right here today, we will do our best we'll follow up individually with emails as well.
Yeah, and I see the live chat going off today. So thanks so much. And keep submitting those questions in the Q&A. We're going to answer as many as we can once we wrap up our tips. And there's also our giveaway. So please don't forget to do that as well. Manis, just for our last part here, can you go over the T2202 tuition and enrollment certificate? Is that just for students, and how can people use it to increase their return?
Yeah, absolutely. So it's for both students and international students in Canada. So T2202, it's the tuition and enrollment certificate. It's usually given to you by your educational institution, your college or your school, or wherever you are studying. Now, there are some factors to determine whether you will receive this T2202. Main one being you have to have your expenses need to be in $100 or over $100 in fees. So once you've paid the $100 and your educational institution or your school, your university is registered with the Canadian government, then you will receive one of these forms. It's used to reduce your amount of tax you have owing. It's a non-refundable tax credit. So a lot of people would have received the CERB last year. If you can imagine, you have a little bit of tax owing on your SERB payments. You can offset or reduce the amount you have paid by using your tuition and tax credit. Also, a lot of individuals won't have worked. International students might not have worked throughout the year, but they'll still receive this tuition and enrollment certificate. So once you receive this certificate, there's an accompanying form that you use to detail how much you can claim. This accompanying form is called a Schedule 11. So you receive your T2202 and then you transcribe some of the details onto the Schedule 11, and then from that form you'll be able to work out what your tax relief is. So that's the most common question again, is I guess how much can I claim, or how much relief am I eligible for? So there's both federal and provincial tax credit for the tuition's amount, and I guess in this kind of simple form of the answer, the total claim amount for a full-time student is $400 per month, so it's quite a nice amount. And then also, if you're a part-time student, you can claim up to $120 per month.
Awesome. And what are some of the expenses we can claim to get a bigger tax return?
Yeah, so there's a long list of different expenses. I guess the most common ones we've listed on the screen there. So you can see medical expenses, tuition fees. If you've made charitable donations throughout the year, perhaps you pay union dues in the line of work that you do. And then there's also the work from home expenses. So work from home expenses we touched on just there, but we can go as detailed as we want, or we can keep it simple and claim the $2 per day. So again, all of these different expenses we use, we can either use it to maximize your refund, or you can use it to reduce your liability. So I guess, again, we're trying to kind of relay the message of not to panic. There are ways, if you initially see or you suspect you might have a large tax bill, there are certain different expenses that we can use to bring in to reduce your tax liability.
Mm-hmm. And can you tell me a bit more about the medical expenses that you mentioned? Can I claim my biweekly massage therapy appointments, or no?
Yeah, so it depends, I guess. There's a lot of different determining factors. So one thing it will depend on is what province you're in and what the different rules are there. So it changes regarding the location where you are, where you're working, or where you're residing in Canada. But for the most part, with medical expenses, if you pay them yourself, for your spouse, or your common law partner, or certain other related persons are listed as eligible to claim medical expenses. So a lot of people will want to know, how much can I claim? And also, I'm aware, a lot of people on this webinar might be from the International Experience Canada program. So they might be on a working holiday visa, perhaps they're on an internship, or else they're on a young professional visa. You might also be international student, and a lot of the criteria for coming into the country is to have health insurance or just travel insurance that covers you for the length of your visa. So a lot of people won't think about claiming the expenses because they might have only paid $100 to $200 in excess fee. So it's still eligible to claim expenses on your excess fee. So if any of you guys sitting at home watching the webinar have got medical insurance and maybe they paid 90% of the bill, that 10% that's remaining, you can still claim that a little bit left, the amount you paid in excess. So in short, I guess the medical expenses need to be reduced by 3% of your net monthly income, or $2,352, whichever is left. Then you need to figure out the tax credit, which is 15% of the amount remaining on the expense. So there's a couple of different calculations to do there. There's essentially three. You need to find out how much was your medical expense. You need to find out 3% of your net monthly income. Then you minus those from each other. And then the tax credit is 15% of the amount remaining on the expense. So the most common terms of services we see that are used in medical field and which are expensed back would be doctor consultations, nurses fees, if you have a prescription drugs you need to keep up, and medications, perhaps what I mentioned earlier, the premiums paid to private health insurance, they can still be claimed back, and then also orthodontic work. So there is a long list of expenses listed on the taxback.com. We have many blogs about them, and then also on the CRA website. But on the screen in front of you, they're usually the most common ones we see.
Okay. And is everyone eligible to get these personal tax credits that you were talking about earlier?
No, in the short answer, not everyone is eligible. So there is one determining factor. So you need to have earned over the tax-free allowance, or the basic personal amount. So this is that $13,808 amount. In order to be eligible for expenses, you need to have earned over that amount. And the way in which you determine if you're eligible for tax credits is via the TD1 form. So the TD1 form, it's an employment form. We are going to touch on it a little bit later. But there's one very important rule for non-residents we ask them to pay attention to, and this is the 90% rule. So 90% rule, what the CRA want to see is that 90% or more of your income from the tax year has came from Canadian sources. Did also want to look at when you arrived to Canada, how much you earned before you came to Canada, and this is all with a mind of figuring out this 90%. So you might have came to Canada in July during the tax year, and you've earned quite a lot of money before you came. Unfortunately, for most people, they won't earn 90% of the total yearly income from Canadian sources. So we will touch on that a little bit later. But yeah, that's essentially the 90% in a nutshell. This is relating to the TD1 form, so it is very important, guys.
Yeah, and that makes sense, and I agree. If you are in doubt, play it safe, or even better, ask a pro for help. So for the last two questions I have for you, before we move on to our Q&A, what is a TD1 form, and how do we fill it out, and can we edit this later after we fill it out in the beginning of our employment?
Yeah, so a TD1 form, it's a personal tax credit return form. So it's used, well, first of all, it's given to you by your employer when you arrive in Canada, and then it's up to you to return it to your employer, who will then update those details with the CRA. So the TD1 form, it's used to determine how much tax you're going to pay on your income, but also whether you're eligible for tax credits. So like we said, the tax credits is the basic personal amount, and this is $13,808. So if you are eligible, it means you can earn up to that amount without paying federal income tax. And then to find out if you're eligible, this is where the 90% rule comes into play. So we would ask anyone who's filling out the TD1 form with their employer, we'd ask you to read the second page first. And if you're an international student or if you're a temporary foreign worker, we'd ask you to pay very close attention to the non-resident section on the back. That's the question they want to know if 90% or more of your income will come from Canadian sources. So you may have to do some forecasting here. If you're filling out your TD1 form in July, you need to try forecast what you're going to earn between now and the end of the year in Canada. So it's your responsibility to fill it out, and it's also your responsibility to pass it back to your employer. Now, there are cases where some employers haven't been giving out TD1 forms, and our kind of tax tip there is you need to directly request your TD1 form from your employer. If you are filling out your TD1 form and you are eligible for tax credits, then what you need to do is copy the tax-free allowance, so that $13,000 figure, you need to copy that into box 13. Now, there are other tax credits listed on the form, but the most common one is the basic personal amount. So if you are eligible, you need to copy that figure right down to box 13. And if you're not eligible for tax credits, where you think you will not earn 90% of your income from Canadian sources, then you put a 0 in box 13. Another kind of tax tip from our agents would be, if you're uncertain of whether you're eligible for tax credits or not, what makes the most sense is to put a 0 in box 13. So essentially, you're not claiming the tax credits. If you think this was incorrect and you were eligible, you can claim this unclaimed amount back in your tax return when you file it as well. So rest assured, you will, if you don't claim them and you were due them, there is ways of claiming it back.
Okay. So can you also talk a little bit about the T4 and the T4A? I know T4 is an important document since my accountant is always asking me for them. Can you speak more about that?
Yeah, so a T4 quite simply is a statement of the income you received from one particular employer and also the tax you paid with that employer. So everyone who has an employer throughout the tax year will receive a T4 before the 28th of February the following year. So when you receive your T4 from your previous year employers, or perhaps it's still your current employer, once you receive your T4, it just kind of signifies for most people the start of the tax filing season. So your T4, like I said, statement of earnings and also statement of the taxes you paid. Once you received your T4, you can begin filing your taxes. You also receive one T4 for each employer. So, it might be a case where you're waiting on 2 or 3 T4s to come through. We'd advise you to start the tax filing process as soon as possible, and then you can update our tax agent with your T4s as you get them. In terms of a T4A, and I think also a T4E should probably fall into that category as well. So that's going to be a statement of any benefits you received throughout the tax year. So if you received a CERB or the CRB or possibly payments on EI, you will receive either a T4A or a T4E. So you might receive these via post, same with your T4, or perhaps you'll need to log into your CRA account to get your T4A or T4E. Your T4 is solely your employer's responsibility. Now, we do know a lot of people might have issues getting their T4 back from their employer. And what we would suggest there is taxback.com have a document retrieval service. So if you are finding it hard to get your T4, perhaps your employer went out of business or changed location, maybe you're filing your taxes from at home in Australia at the moment, that are your Canadian taxes, and you're finding it hard to get in contact. In those scenarios, I would recommend the document retrieval service, where you can receive all your T4s from the particular tax year.
Awesome. So worst case scenario, what if you really can't find your T4 or you actually don't have one?
Yeah, so I guess if you don't have your T4, there are a couple of workarounds. Like I said, we have the document retrieval service on taxback.com. If you are very keen on getting your taxes filed, which we always recommend as soon as possible, what can help the process is as opposed to your T4, you can use your final cumulative payslip that you received from the tax year in question. So it needs to be your final payslip for each of the employers that you held throughout the year. This has a lot of the same tax information on it compared to T4, so that can also suffice as well.
Okay. Well, thanks, Manus. Now we are going to do our Q&A session. Thank you to everyone who submitted a question in the live chat. We will try our best to get all of them now. I also want to note that we are running a little bit longer than usual today, but if you can't stay for the Q&A session, we will be sending out a recorded version of today's webinar on our YouTube. And we also want to mention that the giveaway contest is now closed, so stay tuned for the winners after the Q&A session. So let's get started on our first question. So this one is coming from Harmandeep, and Harmandeep wants to know how much tax would a person have to pay if his or her income is around $30,000?
Okay, so I guess with this one, it's quite a kind of personalized approach. Like we said, everyone's tax situation and positioning are quite different. So there's a lot of extra or additional questions I guess I'd need to ask Harmandeep in order to figure this out. But in general, there are federal and provincial taxes. They kind of hover around the 15 to 22%, I believe, in the income tax bracket that you're currently in. But there are plenty of tax calculators, including on taxback.com. We have a tax refund calculator that you'll be able to work out exactly what taxes you need to pay and how much of a refund you may have as well. So again, if you're looking for more of a detailed kind of answer with your personal circumstances, then by all means get in contact with myself at taxback.com.
Awesome. Our next question is coming from Emma in our live chat. Hi, Emma. She said that she had arrived in Canada in September of 2020, and she is here for a 2-year working holiday visa. Am I a resident or a non-resident for tax filing purposes?
Yeah, very good question, and very applicable to your situation. So I believe Emma mentioned she arrived in September 2020, is that correct?
Yeah.
Okay, so I guess the first thing I would ask myself is how long you've been in Canada, and we're purposely just talking about the 2020 tax year. So if you arrived in September, unfortunately, you're not going to meet the 6-month criteria before they look at your significant residential ties. So because you haven't stayed in Canada for longer than 183 days, you will automatically be considered a non-resident for tax purposes. So although you are filing now in this tax filing season as a non-resident, when you file the following year, your tax residency status may change. So although you're a non-resident now, it's important to kind of address the same question this time next year as well.
For sure. So next question from Elaine. She's asking, do I have to pay tax on the first $2,000 from CERB if I paid it back? It still shows as an income on T4E.
Yeah, so again, another common question we've been receiving. So the CRA had a big push just before the new year, and the reason they were trying to ask if anyone has received CERB or CRB or EI payments where they weren't eligible, they were asking for those individuals to pay them back in full before 2021. So if you didn't pay it back in 2020, then unfortunately you will need to pay tax on that in 2021. So it depends. If you were eligible for CERB, and rightly so, then you'll just need to pay the tax back on that. If you weren't eligible for CERB and you still received that amount, you'll need to pay back the full amount plus tax on it as well. So I guess, again, it depends on your personal circumstances. But in short, if you didn't return the payment before the beginning of 2021, you will need to pay tax on it. And I guess, our tax agents would recommend withholding at least 20% for tax purposes.
Got it. Hey, so we have this one from Joy in our live chat. Hey, Joy. So she's saying my temporary SIN number has expired, but I still need to file for taxes this year. I also still have tax credits from school linked to that number. Do I still file my taxes with that number?
Yeah, so there's a couple of questions I'd be asking here in terms of your temporary SIN. It's expired. I'd be keen to figure out if you're still working, or it's not if you're still working, but if you're still in Canada. In short, your SIN stays valid for tax filing purposes. So there shouldn't be a problem filing your taxes with your SIN. You can request a new SIN, but I wouldn't recommend doing that just yet. Your SIN doesn't necessarily expire for tax purposes, so you are able to still go ahead and file your taxes. Your credits, if they're linked to that SIN number as well, then you can use that to reduce your tax bill, or you can carry them forward to the following year if you're still in study in Canada.
Good to know. Good to know that SINs don't really expire for tax purposes.
Yep.
So for our next question, we do have Roberta. She's asking, what about foreign income? How does she declare that?
Yeah, so I guess foreign income, in short, it is reported on your T1, your income tax filing return form. And then also this will be correlated to your TD1 form you probably filled out at the beginning of your employment. So there's a bit of a cross check going on between the TD1 and your T1 form. So in short, the T1 income tax return form, that will directly ask you, did you have any income earned from outside of Canada in the tax year? And I guess quite important to note here as well is if you're a non-resident, you won't pay taxes on the income you earned outside Canada. However, this figure that you earned outside Canada will be used to see if you're eligible for the tax credits. So this is where the 90% rule comes in. But if you are a resident in Canada, you will pay taxes on the income you earned outside Canada.
Okay, gotcha. So we have another live chat question from Jeffrey. He's asking, is it easy to fill the tax return for the international investor? My clients have investment properties in Canada, but they live in Hong Kong. This is actually an interesting question.
Yeah, so quite applicable to you guys that live rent here as well. So what I would recommend is this is going to be a little bit more complicated just with the complexity of things in different locations and also with investments. So I'd recommend enlisting either taxback.com or a tax service provider in order to help you with this. Unfortunately, they are a little bit more confusing than your general kind of income tax return filing, especially for non-residents. If you're tech savvy or I would recommend you could try it yourself, but I guess with something like taxes, you want to make sure it's as precise and accurate as possible. So I guess my recommendations here would be to enlist a taxback or a tax service provider.
Yeah. Okay. And next one is from Jajal. He or she wants to know how to get the maximum tax benefit as an international student.
Yeah, absolutely. So I guess some of the tax tips that we touched upon would be very relevant to yourself. So the first thing I'd start with is your T2202. So to receive your tuition and enrollment certificate from your educational institution. And then also I would sit down and maybe spend 20-30 minutes trying to think about the different expenses you had throughout the 2020 tax year. So there might be some things that you're overlooking. If you were working, whether in full-time employment or temporary employment, the work from home tax credit may be applicable to you depending on the length of time you worked from home. So all of these different amounts, whether it's the basic personal amount on the TD1 form, your medical expenses, perhaps you had tuition expenses. You more than likely did have tuition expenses. Then also the work from home. All of these things can be used to maximize your tax refund or else reduce the amount you have owing. So I would just spend a bit of additional time trying to recollect back on any possible expenses that you can write off against your tax return.
Got it. So we have another question from our live chat from Beandris. Beandra's question is, if my spouse and I entered Canada on July 5th as temporary residents, which they are open for work permit and study permit, are we then non-residents?
I guess I would be keen to see what type of visa you entered on. So I'd also be keen to see where the term temporary residence was received from, or if that was officially stated. So I guess the 183-day rule, I think you fall just short of that for the 2020 tax year. And then there's also going to be the significant residential ties. So it's a determination of a multiple different factors. So it is case by case basis. I wouldn't want to give misleading or the wrong information live in a webinar, but it's an interesting one. I would be intended to think that you're going towards the non-resident side of things, but there is additional questions we'd have to ask. But by all means, I can follow up with you directly after the webinar, and we can look into a little bit further there.
Awesome. We do have another question here from Vianney, and Vianney's asking, how do I do my taxes, or how do I file a tax return?
Yeah, so the most important document you want to fill out is your T1. That's your income tax return file. So if you can download that directly from the CRA website. Now you will be responsible for all the information you've provided on the form, and also to make sure it's accurate and clear. And then it's a bit of a lengthy process that follows. Of course, if you wanted to go with taxback.com, we would issue you with a free tax assessment to let you know if you have a refund due or if you have an amount owed to the government. And then from there, you can decide if you want to proceed with taxback or not. We would handle all the paperwork, we'd make it quite simple, as easy as possible, and we'll keep relevant contact with you, with our tax agents get in contact on a kind of a weekly basis to give you updates on where your tax return is. The most important form, though, is a T1 tax return form.
Okay. So another live chat question. Our live chat is just popping with questions. This is awesome. Thank you, guys. So this one is from Emma, and Emma's asking, do we include any government student loans as well? I'll have to start paying mine in the fall. I'm not sure if I would include this in my 2020 taxes or in the future or at all.
Yeah, I would definitely include it. So if you received a student loan in 2020, then I would definitely include it in your 2021 tax return. It is tax deductible as well, so you'll need to fill out additional forms, the forms of which are not on the top of my head right now, but there is ways in which you can determine the tax credits that are available to you through your student loans. Again, I'd be happy to take a further look at this or put you in contact with the tax agents. Although I'm doing my best to answer the questions, I don't have all of the answers to tax scenarios, so bear with me. But yeah, I would include it in your tax return. It's definitely of use. And like I said, if we can follow with you directly after the webinar, we can give you some more kind of accurate information.
For sure. And like you mentioned before, taxes is just such a personal thing, so it also depends on their situation too.
Yeah.
So for our next question, this is from Christopher. Christopher is asking how to file taxes outside of Canada.
Okay, yeah, good question. So it does become a little bit tricky. You are going to, no, it's possible to file it yourself. However, wait times with the CRA, whether you're waiting for a response or a phone call, waiting for them to pick up, it can be quite a long process to get in contact. And not only that, you're going to be dealing with the time differences as well. And not only that, but the cost of calling a Canadian number for prolonged periods of time. For the ease of use, I would say to go with TaxBack. That's the main reason why we're kind of set up. We're non-resident tax filing, but also for any individuals that have returned home after their visa, then it's easy for them to get in contact with TaxBack. We have agents in different countries worldwide, so we can make sure we talk to you in your native language at a time that suits you, and we will handle all correspondence between the Canadian Revenue Agency and yourself. So it's a little bit of a stress relief.
Yeah, that's awesome. So we have another question here from Emma. Would students be able to apply for the working from home tax credit, or is there some version of this tax credit for students specifically?
The work from home tax credit should be applicable to yourself, depending on your working situation. So once you've worked for more than 50% of your time at home over a 4-week period, then you qualify from the work from home tax credit. So they don't discriminate whether it's a student or international student or a temporary foreign worker. So this is open to everyone in Canada. So I would say, depending on your circumstances, it's quite possible that the work from home credit is applicable to you.
Okay. Another question here from Joy. I live with a Canadian citizen, but I'm only a temporary resident. Are there any benefits for me?
Yes. So as a temporary resident, again, I would ask you to maybe pay attention to that term temporary resident and maybe look into where that came from. You very may well be a temporary resident. But yeah, in the short answer, there are tax credits and there are different incentives that are eligible to non-residents or temporary residents as well. So for the most part, the basic personal amount is the main one. That's the $13,808. That's a tax-free allowance. Again, you need to work out if you're eligible for that via the 90% rule. Then following on from that, like we discussed on the call, on the webinar, the work from home tax credit, medical expenses, perhaps you're an international student, and then you'll have your tuition and enrollment certificate issued to you as well.
Okay. We have a question here from Elena, and she's asking, can we carry over the tuition?
Yes, you can do exactly that. So if there's unused tuition credits that you don't want to offset this year against your tax bill, you can carry them forward to the following year. Absolutely no problem.
Okay. And another question here, Melissa from our live chat is asking if there's proof required to claim the simple working from home tax credit of the $2 per day.
Yeah, so I guess in essence, the real answer is no, but there is always that possibility that you'll be audited by the CRA. So we're never encouraging anyone to lie or to kind of be deceitful or untrue on their tax return form. The simplified process is that exactly. It's a simplified process, so whereby you don't need to, I guess, put forward any supporting documents with it. Now, if you are audited by the CRA, you would usually get a notice of assessment, and you'll be asked to supply supporting documents. So I haven't seen this circumstance or this situation unfold before because this tax credit is quite new, but I'd imagine they might look for supporting documents from either yourself or your employer to back up your claims.
Okay. Another live chat question here from Marie. Can we get a direct deposit refund on a non-Canadian bank account?
Yeah, so it depends if you are a resident of Canada or a non-resident. So I guess I'll first chat about non-residents. So non-residents will face a couple of different hiccups when they're filing the taxes with the CRA directly. Number one, you'll need to be physically in the country. Number two, you need to have an address where they can send your tax refund check. That's for non-residents. And then also the waiting times can be quite long. You can wait up to 16 weeks, we've seen, to receive a tax refund check. So you need to kind of forecast and look forward to see, where will I be in 3 months from now? Am I going to be at the same address? Maybe I'm moving around. I might have done a ski season at Whistler, and now I'm going to move over to Banff for the summer. You need to kind of foresee this to see where your check will end up. But in short, if you're a resident, you can have it sent to a non-Canadian bank account. That's possible. Now, I will say the joys of having enlisted a tax agent like taxback.com is that we can send your tax refund directly to your bank account. So if you are an international student and you've returned home to India, we can have your refund sent to your Indian bank account. Same if it's Australia, UK, Europe. That's the joys of enlisting the tax service provider, Taxback.
Awesome. So we do have our last question here from our live chat. From Emmanuel. Emmanuel is asking, do we pay tax for income earned, like investment ROI, in our home country?
So that would also depend on what your residency status is, where your investments are, and also your home country. So I think our tax treaties would come into place here as well to see if there's any double taxation agreements or tax treaties between your home country. Now, perhaps your country is Canada, and if so, apologies, I've got the question a bit mixed up. But yeah, there's a couple of additional questions. For the most part, you will need to pay tax on investment properties you have. Depending on where those investments are going, are they being sent to your Canadian bank account? Perhaps they're going through to your bank account in your home country. So a lot of additional questions to ask there, but by all means, we can get in contact with each other after this webinar, and I can put you in contact with a tax agent. We can address this a little bit further.
Awesome. Well, that wraps up our Q&A session. So thank you for all the questions. And I'm sorry for any questions that we did not get a chance to address. A Taxback agent will connect with you via email. And we're actually ready now to announce our 3 raffle winners. Dun, dun, dun. So our 3 winners are Oli Schleibener. I'm sorry if I mispronounced that. Jeffrey Au, Elena Lopez. Congratulations, guys. You have won $100 Amazon gift cards. We will be emailing you with more information on how to claim your prize. Thank you for everyone joining me today. Manus, it has been so informative and such a pleasure to have you here today. Do let our audience know, where can they find you, connect with you, and learn more about Taxback.
Yeah, thanks everybody for joining us on the webinar. I guess there's going to be a follow-up document that's sent from LiveRent, so there's plenty of information there. You can go directly onto the taxback.com website, and we'll have links to either the tax filing documents, or perhaps you want to just get a free assessment with our tax refund calculator. You can find it all on taxback.com, and the lovely guys at LiveRent will send a follow-up from that. If you're a LiveRent member, you can avail up to $15 discount. And also each individual person that engages with the links that we send out after will receive a free tax assessment.
Awesome. Thanks again, everyone, and we will catch you again on our next Live Talk. So the next one is on April 8th for a webinar on tax tips for rental property for our landlord community. So follow us more on updates for that. And for now, bye.
Thanks, guys. Bye-bye.